transfer that do not qualify for derecognition. There may be cases where entity has transferred the assets, but it has retained substantially all the risk and reward related to transfer assets. In that case, it will not qualify for derecognition of assets from its books of accounts. In this case, we need to continue to recognize the financial assets, and we will recognize a financial liability for the consideration that we have received against this financial asset. Apart from it, we need to recognize any income on the transfer assets and to recognize any expense that has incurred on financial asset. For example, if assets could not be derecognized because of the guarantee provided by entity, so in this case of continued involvement, India is required that entity need to measure the transfer asset at the lower of carrying amount of the asset and the maximum amount of the consideration received in transfer that the entity could be required to repay. It means the guarantee amount. So the assets will be measured at lower of carrying amount of the asset or the guarantee amount. Apart from it, the associated liability to be initially measured at guarantee amount plus fair value of the guarantee, which is normally consideration received for the guarantee. And if transfer asset continue to be recognized, in that case, the liability and assets not to be offset with each other and no offset of any income from transfer asset with any expense incurred on the associated liability.